All right, good morning, everyone. As we head into European trade on Wednesday, the 8th of November, we'll have a flick across the headlines. We'll see what's going on. Really, a lack of clear-cut, fresh fundamental drivers in markets at the moment. Obviously, you got the lingering conflict in the Middle East. Obviously, you got the central banks from last week. But ultimately, in terms of fresh headline, we're past earnings, we're past central banks. Lack of economic data on the calendar this week. Really, there's not a lot for us to go off. I mean, yields stuck near lows, stocks sag as markets await Powell's policy clues. We have a couple of speeches now today and tomorrow from Jerome Powell, which we'll look towards. Does he reaffirm the Fed stance from last week? Does he push back on it a bit? We'll see if you believe them last week, suggesting that the dot plot September can now be viewed as incorrect. Would suggest there's no more interest rate hikes to come, and they are closer to a cut than they are another hike, and obviously that cut isn't likely to come till probably back end of summer next year. Do need economic data to deteriorate drastically for that to happen, but in terms of which is coming next, regardless of when it happens, might be a year away, but in terms of what is next to come, you'd have to imagine probably a cut bar any aggressive spike higher, should I say, in the price of inflation, or in the rate of inflation, should I say. Oil prices sputter near 3-month lows as demand concerns mount. OPEC's exports up since their August low. So OPEC exports up. That can either mean that they are producing more, which they are not, or there is less demand, which there is. So there's less demand for oil from oil consuming nations, therefore negative for the price of oil. If that was the other way and they had increased output cuts, then they could wind that back slowly. They might have to decrease them again, which is obviously the reason why Saudi Arabia and Russia continue with their production cuts. Apart from that, really, that's all you're kind of looking at. You kind of see some opinionated pieces, cracking US dollar strength to spread as economy slows. When you can make your own assumptions to that. I think what's interesting, though, over the course of yesterday and today is you have seen a bit of a bounce back in the US dollar. Now, we'll look at some charts when we get around to a bit of downside in stocks, but now 1 week percentage change month to date, they were pretty aggressively over the course of this month and over the last week as well. So, a bit of a pullback. Natural data, another attempt higher. Yesterday's US session failed somewhat, but we're kind of just relaxing up at the highs. Maybe we go again, we'll have to see. But stocks lower across the board this morning, commodities lower across the board this morning, yields higher, which is interest rates higher, but they got whacked last week, so a bit of a stabilization at the lows isn't too unexpected, to be fair. US dollar strength, though, across the board, apart from your Aussie and your Kiwi, but they got whacked yesterday, so a bit of a bounce back in them is natural. But US dollar strength across the board. Now, we'll have a look at some charts now in a minute. I think it's quite interesting moves, but anyways, euro and your sterling negative, Swiss franc negative, but they're all flicking about. You can see euro and sterling is flat, sterling and euro is flat. You can see the Swiss franc flicking between green and red against euro and sterling. The Japanese yen flicking between green and red on euro and sterling. So all these are red: euro, sterling, yen, and Swiss franc. They're all red now, flicking past green against each other. And I mean, they're weak on the day, but ultimately you got a lack of volatility across FX. I mean, the biggest percentage change on any of these currency pairs is 0.23. It's not exactly a massive amount in terms of percentage change, is it? You can see US dollar across the board. You can see the pullback in your Aussie and your Kiwi. It looks like a bit of a flag though, and wants to go again. Your euro and your sterling continue to kind of grind lower. That's not really a pullback and go again type move. I mean, you do have this support level here hanging on at euro dollar, and I think that is important. This support level is important. If you get a breakthrough there and you continue to the downside, I mean, the consensus is now for US dollars to be short. Well, you'd have to think market consensus now is for US dollars to be short, but at the end of the day, I don't know. I don't know. It just doesn't look like a sort of pullback move. It looks like it wants to make an attempt higher again. And maybe they think other central banks are closer to a cut. Economic data in the US does still continue to outperform. Yields in the US are still higher than majority of yields in the rest of the G8. So still makes the US dollar a more attractive buy than some of the other currencies. Economic data is still okay in the US, albeit some weak prints last week, but at the end of the day it is still positive. So a little bit of a tricky one. Stocks are still at the highs. You can see the S&P, the Dow Jones, the Nasdaq, the Russell. The Nasdaq's the one that really got going yesterday into the US session. Has had a bit of a pullback, but it wouldn't surprise me if these went again. But the break through these highs was not exactly convincing on the Dow Jones, the S&P. Russell didn't even get a breakthrough the highs. So I think, yeah, I mean, the trend is your friend and all that, but they look like tricky moves to try and trade. If you're going to go long, I think Nasdaq's the one. Nasdaq's the one to be long. If you're gonna go, short, I mean the rest of these look okay for shorts, but I think Nasdaq's the one to keep an eye on for longs. Your DAX, your Euro stocks, just pulling back. FTSE sideways. It's difficult. I mean, still gonna have to weigh on the side of wanting to buy these, but ultimately with the US dollar pulling back, it doesn't look like it wants to go again. It looks like it wants to kind of just continue on lower or higher. Sorry, these to continue on lower, these to continue on higher. That's not really a situation where kind of stocks push higher with that. So I don't know. I think it's a bit of a difficult week at the moment so far, to be honest. I think it's one of those weeks, if you can get out of it flat, I think you'd be doing all right. You can see economic data today. Inflation prints from the Eurozone, or from Germany, should I say, in line with consensus. They are the final prints. We've already had the flash or the preliminary prints. So not too much to see there for us. Yeah, I mean, oil down aggressively yesterday. I said OPEC have exports going up. Also Chinese data, trade balance figures, exports down, imports up, trade balance figures down aggressively in China. There's just further weakening of Chinese economic data, which is a negative for oil. Now gold going down in line with that US dollar strength, but I think it's a bit difficult to predict. I think trading's a little bit difficult this week, if I'm being 100% honest. Doesn't look like it's set to get any easier with the economic data to come out the rest of the week. So maybe a bit of a choppy week. As I said, maybe getting out of this flat isn't the worst thing in the world. So in terms of where to go later on today, I mean, oil still, you have to imagine, stays under a bit of a pressure. So maybe selling some rallies on oil. Gold under a bit of pressure this week. Maybe selling some rallies on gold. Continuing to buy these and equities. If somebody put a gun to my head and said trade equities, I would be long equities, but ultimately these don't look too convincing for wanting to push higher, do they? US dollar though, that support level on euro dollar, albeit it's only a short-term support level, I mean it's only an hourly support level, but I do think that's an important level. If we do get a deterioration and a break below that, and we get broad-based US dollar strength off the back of it, that is interesting. That is interesting, and it's something that I will definitely be looking at with a keen eye in today's session. Economic data, 2:15 today. Jerome Powell back on a speech. Let's see what he has to say for himself. Does he reaffirm the stance from last week, or does he backtrack on that and keep an interest rate hike open? We'll see what he has to say. But for now, a little bit tricky trading conditions. Keep an eye on that support level in euro dollar. Keep an eye on oil, gold, maybe potentially some upside to stocks. But I'll say that with stocks with a massive degree of confidence. But as I said, that is probably where I would point my ideas.